Okay. A quick analysis of gold. That is the popular XAUUSD here. First of all, we want to start from the upper time frame of 1 month. This chart is reading as far back as 2005 up to 2023. The yellow line we have here is the 200 exponential moving average. What I'll try and explain today is just a quick overview. How can you spot the direction of a market within less than 2 minutes of looking at the screen? The exponential moving average here is helping us to tell what is the move, what is the market move. If we look at these candlesticks, yes, they are a mix of red and green. Green meaning when you are having, when gold is going up, and then red means when it's going down. We literally call it buy and sell. If we check here, you also must have had the popular double top, triple top, double bottom, triple bottom, and so on. Here, the exponential moving average would help us determine what should be the right entry strategy. Here, I'm going to cascade from 1 month down. Actually, my full analysis will be on the daily time frame, but I started from 1 month for a purpose. And of interest here is in here in 2011, precisely in August 2011, you have a ride that goes up to, what is the one here? This is 1824. Then the body, this is the body, 1824, and we have the wick to 1911. I am marking this out. I blocked it, I marked it out as a rectangle, and I extended it towards the right hand side. Now, this will form a block for me. It's an interesting point for me, because when you have this run of highs and then it peaked here, it decided to go back a little. It did a retoucher which forms it. It didn't touch it actually, meaning the double top is not formed here. Then it retracted towards the exponential moving, 200 exponential moving average. So on reaching here, you see, then it bounces off again and begin to climb. Now a new peak is formed here. You see, this touches this, so you could have counted from here the double top, then and so on. So you have it here, it breaks it, then it came down again, it breaks it, and it came down again, it's on top there again. Now I will go down to the weekly time frame. In the weekly time frame, in the weekly time frame, this is still visible. So we can also see again what is happening within the mark I put from behind. That's 2017 or thereabout, coming forward here. You could see that we have the behavior of the market is that that line was broken here. It went up, it came down again, it retested it. It didn't, if you observe, there is no candle forming below this now. This is weekly time frame. The other interesting thing to look at here is that the 200 exponential moving average also comes to play here. You could see that it is a retest of the exponential moving average. Now, I will tell you the concept of engulfing candle. That is when you are looking at when to enter market, especially like this is for big players. For example, I analyze from the monthly time frame. When I skip to the weekly time frame, I saw an engulfing candle here. You see, this is an inverted hammer here. Then this candle is of interest. This is October 9. This candle engulfed this candle. It engulfed the two previous candles, which automatically means that the trend is changing and is changing upward. That is this significant candle of October 9. The candle that followed after the October 9 now shows that it forms completely outside this box and it completed completely outside it. What this will tell me as a trader is that the potential of this upturn, the market upturn, to go upward the more is very, very high. As I said, I'm going to explain from the daily time frame. I'm only bringing concepts here. So what will this tell me as a trader? I would say that, okay, if there is a strong indicator, first of all, this is an upward trend, right? If there is a strong indicator that from the upper time frame, there are possibilities for this market to go upward, what will I do? Then I will look for entry positions in the lower time frame. That's why I went to the weekly, and there is a confirmation from the weekly time frame. These candles are confirmation for me that the market is still in uptrend. Then, because of how much I hold and how much will I be trading, I will go to the daily time frame and see what is happening in the daily time frame. Remember, to note from here is that you have this retest, the 200 exponential moving average. It went back. You have a full candle form outside the box. And now I will go to the daily time frame to see what are the opportunities available. In the daily time frame, again, the 200 exponential moving average came to play. It has broken it. What this will tell me is that there is likelihood, because if you look at the weekly time frame, it came back to retest it. Now, is this likely coming back to retest this line before it moves upward, or what is going to happen? Remember, this is now a ranging market here. It's ranging, right? You have this limit at the upper bound, you have this limit at the lower bound. What can happen otherwise is, if I would want to use the same box I did here in the monthly time frame to actually read my market when to enter on the daily time frame. How do I do that? I will come back to that. Analyzing here, we see that there was a run of a downward trend. It turned here. It crosses. Okay, this is to confirm this downward trend. Here we have one. There was a test here at the 200 exponential moving average. It went back. It came the second time, busted it a little. It came back up again, retested it, went up, and then breaks it down fully. This will tell, is this a U-turn on the market trend? Is this going to begin to go downward now? But the next thing it does was, instead of coming to retest it, it strongly, look at this candle, the candle of Friday 13th. It strongly came and cut across the exponential moving average. It did not stop there. It came down here, it almost retested it, and it went stronger. So which means this has also broken the psychological line here that would have said, if it has retested or it turned within this area, then the downward trend would have been confirmed. So coming from the principle, the use of engulfing candle, this candle, apart from you have a doji here, these two candles are strong turning candles. They engulf the previous set of candles here, about 1, 2, 3, 4. 4 candles, 4 days candles were engulfed by these 2 days. So there is a strong move upward here. So what I would expect naturally in the coming days would be that this market would come back to retest the 200 exponential moving average. And if this is, pay attention to this, if after coming to retest this exponential moving average, I see an engulfing candle going up, I will ride with that engulfing candle. So in short-term trading, this first one, this is a break. If you were lucky, you catch the trade from here and you ride it up to here, congratulations. But if otherwise all hope is not lost, you can still have that chance to ride it. It's just for you to simply wait for the retest of the 200 exponential moving average. So I don't know when. This might be this week, it might be next week, but this is definitely coming back to retest the exponential moving average. So once it does that and I get my entry confirmations, there are different strategies for entry confirmation. I rely much on this engulfing candle principle. I will cite some few examples here for you to see it. When you have an engulfing candle, it's a strong indicator that the market is going to travel a bit far. So, looking at, as I said, here, let's look at the behavior. This is the last trading day, Friday, November 3rd. Again, if I would want to look at this, it might be ranging. It might be a ranging market for a short while before that confirmation becomes obvious. So what I'm saying is that there is tendency that this 200 exponential moving average would come in contact. Either something similar to this, something similar to this, or some just very close. It's going to come back very close, but when you spot the U-turn with an engulfing candle going up, and this could also be that this market of November 1st, this could be the retest it wanted to do, but it might come deeper. Once you spot that retest and you spot an entry opportunity, then ride with the market. Now, how far would this travel? How far do you think this will travel? Now, we begin to look at what are those, this level, there is a psychological level here, right? Here, on the daily time frame. What happened to this level? If I come back here, let me take it from here, from March, you had a run and it stopped here. So let me use the triangular line here again. Okay. Okay. Sorry. Just a second, please. I have some logistics issue here. Let me explain before I complete the chart. What I'm trying to say is that at that psychological level from March, I would plot a box that would show us what are the areas to watch out for, the zones that when you likely have a trade, either within it, above it, or below it, what does it mean? Okay, and what should you do as a trader to see that you don't lose your fund, and you take advantage of that trading. Just 1 second, please. Yeah. Okay. So, yes. So, for you, just a clarification on what I do or how I do it is that I take the body of the highest in that run, right? Then, and the wick of that body. If you look at this run, before it turned, the highest candle was this red one. Then this is the wick of the highest candle. So that is the height I use. Then within that area I will look for my retest. Now, what happened here was it went up. this is it. It came down. It came back inside. One. It came down. It came up again the second time. Then this second time, what eventually happened was that a candle eventually, this is a trade within it, right? But there is a candle, this green candle formed outside this box, which invalidates this formal box, and then this becomes the new high. So this is what I want to spot out. This becomes the new high. So I will need to move this box from here to actually read this second one. Note this is just within the daily time frame. My monthly analysis still hold. So this is for a quick turnaround. We are not trading the big buckets. So now I have moved it to the highest of this. So what I will now watch out for is trades confirmation within this. As I said, if you look at this market now, there is no, this is the first one. This is the second touch here. You see none of the candles closes above this line. Then it rides down back again to test the exponential moving average of 200. Retests, it tested, it began to come up, right? Then it came back again, it breaks through it, came back. So this is ranging. This is a ranging market here. Now something interesting was about to happen here. Multiple things to read. You have the double top, or you call what you call the triple top. 1, 2, 3. If I slant this slope, if I make a slope here and slant it, that's not my interest. But of interest for me is to use the exponential moving average to test this. So it breaks the exponential moving average down. Then I was waiting for a retest. Remember, this is another trading zone, right? The monthly cyclical trading zone. That if it had broken this down further, note here, very important, that there was no full candle down here, which still give me that impression that the uptrend is still intact. Now, it broke this 200 exponential moving average down. It came up. The next most interesting thing to watch out for in this last quarter is that, is this coming back to break it again? If it breaks it, instead of touching, rebouncing and going up, if it breaks it, and eventually I have a candle, a full candle formed below this, then the market trend has changed, which means there will be confirmation. I will begin to look for sell confirmations instead of actually holding strong for buy. At the moment, I'm still holding strong for buy, but as I said, these are the conditions that could actually change the narrative. Now, looking at the daily time frame, as I said, you have one here. This is a double top here. Then one, it came back for a test. 2, 3, 4. I will call this a 5. A, B, C. The slogan you have had is another analysis, another tool I use. That is to look at what's happening in the market. Then one here. This is a 1. What I'm looking for is that this market, the meeting of these candles and the exponential moving average I mentioned here would be, I want to give you the range where it will likely happen. And if any candle form full outside that, then ignore the formation. So if we look at this short run here, the highest candle here before the turn is this red one, actually, the one in the middle. Then, forget we have the wig of this green one. The one in the middle, is the one in the middle is actually the one that's, yes, let me look at it critically, because it's going to be very key for our decision making in when to catch the early trend of this new market if it's going to go upward. So I will put another box there, which is here, as I said, is reading this. Sorry. Yep. Oh, sorry. Okay. this is okay. I have to move it back a little. Just 1 second. Okay, yeah. Okay. Okay, good. So now we have it. So the meeting of these candles, the market and the exponential moving average will be within this zone. I think we can give it a feel. Let's fill it with let me see, border, where is the field? This is the first one. I want to see something else. Okay. Thickness. Okay. Okay. Yes. I just need to make it different for us because it's a special line, especially those that does the daily. If you are using the daily analysis, daily time frame for your analysis. So what I'm saying is that there is going to be a candle movement around this line. This line, the exponential moving average itself, and the exponential moving average, and this box. So if there's going to be a retracement of this trade, is coming around 1940 something. But if it falls, if you have a candle form and complete below 1940, then there might be, which is likely to also break this 200 exponential moving average. The upward trend has changed. But for here, for this to have been valid, this entry to have been valid, when it breaks here, it retests here, it breaks, it retests, it should have turned at this point, but it breaks it. The next expectation now is that it's going to bounce off this region again, and when it bounces off this region, or when it arrives this region, I would look for an entry position. I will look for an entry position here, which usually my favorite would be to have an engulfing candle. If I have an engulfing candle within this region, then I would enter for a buy. So this is the quick one I would want to show you, and then it requires a lot of patience to actually trade these opportunities. But from what I have seen, the current market trend, which again you need to remember, there are a lot of news queued up here. We already have one of them. Pay attention to them because they also affect the price actions, right? So pay attention to them. This area is key. There is news around that area. It will change the sentiments of the traders. But if the candles, that is for us that use candlesticks analysis, this is of interest for us. We will keep eye on these coordinates where this line crosses this or the candles crosses this, and then we can make our entry decision. Thank you. And also you could take a screenshot if you want to make a reference to it, just to guide your market decision. Let me zoom it out a bit more. Remember, this is the daily time frame and is the XAU/USD pair. Thank you. I'll leave it on the screen for like a minute, then